So in this video, we're gonna go over the 10 trading commandments that are absolutely essential to your trading success. If you don't follow these, you're probably gonna have a really short trading career, probably fuck up and lose all your money. So make sure you pay attention. What's up guys, Austin here, 7-figure entrepreneur and day trader. I've been day trading over half a decade, own multiple businesses in the trading space, and this is what I have to share with you to make your journey just a little bit easier. So as a trader or as any type of person that wants to accomplish anything, you need to be self-aware. So especially in trading, you need to understand, when do you get emotional? Do you get emotional when you're on a good run and you're making money? And what types of emotions? Do you get emotional whenever you're losing trades or trades aren't working in your favor? How do you feel? You know, these are types of things to where you really need to understand how you as an individual act at certain moments in time, and what systems can you implement to better deal with those situations. So in trading, you are your own worst enemy. It's you versus you every single day. And the only way to really overcome stuff like that and to push that needle forward is to understand how you can improve with dealing with yourself. So one thing that used to happen to me a lot is I would get filled on a trade, and I'm sure pretty much 90% of traders can relate to this. Time slows down. You get filled on a trade, you could be in a trade for 15 minutes, it could feel like you were in that trade for an hour or 2 hours, but it's really only been 15 minutes. Now, what I would do whenever I would get filled and the trade would start moving my way is I would start micromanaging the trade. I would put my stops up to break even too early, I would start peeling some off too early in profit, and all that really does is shoot yourself in the foot. And this is how. So whenever you move your stop to break even too early, I guarantee you that it is much more probable that your stop is getting hit at break even than your trade actually reversing and hitting your original stop loss. I guarantee it. And if you don't believe me, go back in your trades and check. Statistically analyze how many times you moved your stop to break even and when you did it. And if you got stopped out at break even, I want you to see if your actual stop would have gotten hit too in its original position. This is one of those things for me. It was much more probable that I would get hit out at break even. Now, in terms of peeling stuff off too early, this is where I would just micromanage things. I would start, taking some off as my trade just started to move my way because I wanted to lock up some of the gain. It makes you feel good. Trading has physiological effects. You have dopamine rushes. Whenever you take some of that profit off the table, it's nice. You're paying yourself. It feels great to make money. But it's only good in the short term, because in the long term, what's going to happen is you are shortening your risk to reward profile. So if you had originally anticipated to make 3R on a trade and you took off 30 or 40 or 50 or 60% of that trade too early, now you've compromised that risk profile in the trade from 3R to maybe 1.5R. And I guarantee that if you do that, you're probably not cutting your losers too early. You're probably holding your losers all the way to your stops. And a lot of people do this. This is one of those things to where it massively shrinks your bottom line. It feels great in the short term to cover early, but it really sucks in the long term because all it does is shortens your bottom line. And this is one of those things that I don't care what you say, it's true, black and white, pull the stats on it, I promise you that this is correct. So this is where becoming self-aware is massive. Understand where you get emotional and understand what the problem is. So one thing you should do that really helped me is take notes on your emotions. Figure out how you feel at a certain time, whether you're at a loss, in a win, whether you really want to peel some off, or whether you want to cut the trade because you think it's going to fail, or so on and so forth. Actually write down how you feel. Most traders think that they're doing their job of journaling by just writing down what price they got filled at and how many contracts or how many shares they had at the time or what direction the trade is. That is honestly the dumbest thing that you could write down. It's so straightforward. You obviously know what order size you're in, what direction you're trading, what price you're getting filled at, and so does your online trading journal. But what it doesn't know is how you're feeling the second you get filled. What emotions are you carrying with you to your desk that day? How do you feel as the trade progresses in your favor? How are you feeling as the trade goes against you? These are the pivotal things that you need to know in order to grow as a person and grow as a trader and be able to really master your emotions and be able to overcome any emotional pitfalls or challenges that may be holding you back from the next level. Know yourself, control yourself. Another thing is knowing your risk. If you don't know your risk before you get in a trade, you might as well not take the trade at all. Risk management is probably the single most important thing to actually making it as a trader and having a long career. If you have terrible risk management, then you are going to have the shortest career out of any trader in the entire world. You need to know exactly what it is that is going on the line the second you place that trade. You need to know before you place the trade, to be honest with you. So, for example, let's say you're comfortable with risking $500 on a trade, right? But you actually realize a loss of $1,000 on that trade because you didn't calculate what you actually would have lost before you took the trade on. How are you gonna feel when you see that big red $1,000 on your screen? You're gonna be overwhelmed. You're gonna say, I didn't want to lose this much. This is twice as what I was willing to lose. You're gonna be emotional. You're gonna either start chasing to make it back, or you're just gonna totally be a basket case and not be able to trade effectively and keep your head on straight. So you need to know what it is that you're getting yourself into before you even open that door in the first place. And it's also important for you to know your risk, because you need to know your reward as well. So if you're comfortable risking $500, you better at least be making $1,000 for that trade. So you need to know your risk, and you also need to know your reward, and that is an absolute essential. There's like no ifs, ands, or buts about this. If you don't do this, you will not make it long term. Maybe you'll make it for a week or two, a month, whatever, but you will not make it long term. You need to know your risk. So staying mentally clear is one of the things that is not talked about enough in successful trading. Most people just keep, the essential building blocks to successful trading in the actual screens and on the charts. But the truth be told, it really starts off the charts. So before you sit down and trade every single day, I highly recommend that you do some sort of physical activity outside, especially outside, just to get some fresh air. It's setting yourself for the day. And aside from the emotional side of it, there's actual scientific proof that doing 30 minutes of light cardio actually activates your brain significantly more than if you just wake up out of bed, drive to work, or just sit down at your desk and start getting to it. So make sure that you actually turn your brain on physically in order to effectively process everything that you're going to be looking at, everything you're going to be thinking about, and overall, this is just gonna help you make better decisions. I like to go for a walk every single morning, so I trade exclusively from Trade Club. I really don't trade from home too much anymore. And even when I do trade from home, I go outside, I walk for around 30 to 45 minutes, or I'll go for a brisk little bike ride and come back, and then by then I'm turned on, I'm activated, I'm ready to sit down and actually analyze things from a more awakened perspective, rather than just be, early morning or whatever it is, not fully awake, not fully aware, not fully turned on. I'm actually, from a physiological standpoint, turning on my brain by doing some sort of light cardio for 30 minutes every single morning. So highly recommend you do this. You're just gonna be sharper. You're gonna be able to just be more cognizant of things that you might have overlooked. This is super slept on and very, very essential. So make sure that you lay out a plan and you stick to it. And I don't just mean overall, I mean every single day. So what I'd like to do every single day before the trading session begins is I like to map out any areas of overhead resistance, any areas of incoming support, any fundamental news events that might be coming out in the morning that could affect the outcome of my trade, and just overall kind of prep myself mentally for what I could run into the session. So this could be something as simple as when XYZ gets over, let's say $100, then you look to go long. Or let's say XYZ gets underneath $80, then you look to go short. Whatever it may be, lay out some type of scenario that allows you to plan for either outcome. If it's gonna go up, if it's gonna go down, what are you going to do? It's much better to have some type of plan in place, or at least some type of awareness of structural or technical levels, rather than just sit down and wing it and just be like, oh, I'll figure it out as I go. That never works. You're never gonna figure it out as you go. Maybe once or twice, but it's not sustainable long term. And what we're looking to do as traders is build actual good habits that allow us to have long careers. So make sure that you are laying out some type of plan, whether it's simply jotting down levels that you might run into, or an actual action plan of what you'll do if X happens, then I'll do Z. Make sure you figure it out. Make sure you lay out a plan before anything actually happens, so you're more prepared into the session. So what I do is I make a Google Doc every single morning, and I lay out incoming support, overhead resistance. I actually focus a lot on volume profile. So I'll map out, previous day value levels, value area high, value area low, certain areas that might be reactive, certain news events that are coming out, especially if there's any type of Federal Reserve speakers. I always want to be aware of stuff like this, or high impact economic data. I'm always writing it down. I'm writing down the time that it's coming out so I can reference that as I'm going into the session. If there's data coming out at 9:45, it's written down on my doc, so I know at 9:45 some shit's about to come out and things are gonna get a little crazy. So I always want to know what's going on before it even happens, so this way I am able to process how I should move forward either before or after those events take place. Hey guys, we're halfway through the video, and speaking of being prepared and having a plan, I actually have a free trader checklist that you can access through the link in the description. I also have a watch list that's totally free that you can opt into to help better prepare for the week ahead. So if you want to be prepared but aren't sure which way to really do it on your own yet, start by using the free resources that are available to you in the description down below, and I'm confident they'll definitely help you out. So another commandment is leave yesterday at the door. It really does not matter what happened the prior day, prior week, doesn't matter. Even an hour before the session, can't do it. You need to remain emotionally centered every single time that you sit down and are willing to start trading for the day. If you took a loss the day before, don't bring it into today's management. Don't affect your current risk or your current sizing based on what happened yesterday. You need to be able to remain neutral, remain centered, and hit every single day like it's the same over and over and over again. Whether you took a loss the day before, that should not affect the size of today's trades. You should always be able to, 1, execute proper risk management, and 2, stick to your plan always, because let's just say, for example, this is something that used to happen to me. I would take a loss, let's say on Tuesday. On Wednesday, I would be flustered by that loss. I would cut my size, have a good day, and not be able to necessarily make up for that loss because my size on the winning day was so small compared to the losing day. So this is something that's commonly taught and told to a lot of new traders through a lot of the bullshit courses out there. Whenever you take a loss, don't cut your size the next day. Now, if you're taking 5, 6, 7, 8, 9, 10 losses in a row, that's a totally different story. But 1, 2 losses, don't intervene. Just stick to the plan, trust the probabilities, trust your system, and understand that positive outcomes are coming. Just because on Tuesday you had a bad trade doesn't mean Wednesday is not going to provide an amazing opportunity. And the only thing that you're doing by cutting your size is making it so you can't take advantage of that opportunity in a way that you fully should. So there's been many times in the past where I would give a lot of weight to what happened on the previous day or the previous week or something like that. And let's not even make it an example of risk management. Let's make it more of a strategy thing. Let's say, Monday and Tuesday, I take 2 losses, taking one type of trade. And then Wednesday, I'm like, you know what? I'm not gonna take that type of trade anymore because Monday and Tuesday didn't work for me. So Wednesday, I try to trade a totally different way. And let's say that setup that I was trading on Monday and Tuesday does happen, and I totally ignore it because of what happened the days prior, and I miss out on it, and it totally ends up just being an absolute home run. This is one of those things to where you need to remain disciplined to the way that you trade and not let the prior day's outcomes affect how you're going to move going into it. Because let's just say, for that example on a Wednesday, that I maintain the same strategies that I would have going into that session, I would have had a great day, probably would have made up for the Monday and Tuesday, and that's one thing that happens to a lot of new traders. I know it used to happen to myself way back when. I don't let that happen to me at all anymore. I am super rigid and disciplined to the strategy that I trade, and I'm also very consistent with the risk and the sizing that I use every single day that I sit down at the desk. Don't let yesterday's losses affect today's wins, and don't let yesterday's wins lead to today's losses. So always be a student of the game. If you follow me on Twitter where I post all my trade executions, I always hashtag student of the game at the end, whether it's a win or whether it's a loss. And that's because that's what I view myself as. I'm a student of the game. There's always more to learn, and whether that's learning through analyzing your performance, whether that's through analyzing your emotions, whether that's through seeking new information through other types of trading resources, not just strategy-wise. A big thing that I have learned a lot about myself as a trader is always looking for ways to improve my trading psychology. And I do that by reading a lot of different trading books. One I mentioned in a previous video where I did a video on the books that I recommend for day traders was Mental Game of Trading. That was absolutely huge in me learning about just the different types of categories of mistakes that happen from emotions that arise. And it gave me, honestly, a huge breath of fresh air in realizing that I wasn't the only person that felt that way at the time. And what that did was allow me to know that there's so much room to grow as a trader, and gave me actionable steps to not only become aware of when I would act in certain ways or feel certain ways, but also gave me frameworks and plans to overcome them. So always being open-minded to understanding that you might be wrong a certain way, or you might have more to learn in a certain area, is absolutely essential. You can never think that you know it all in this game, because there's 1,000,001 ways to make money, there's 1,000,001 ways to lose money, but you always need to be centered and leave your ego at the door, and just understand that you can always improve in more ways than just technically, more ways than just execution, but especially mentally. So always be a student of the game, always be open-minded, and always make sure everything that you're learning is backed by facts. So guys, even me, I've been doing this over half a decade, made a shit ton of money. I mean, obviously I want to go more, so I have to learn more from other people. So I could, rest on my laurels and say that, I've been doing this long enough, I've made enough money, I know everything, but all I'm going to be doing is actually cutting my learning curve and not allowing myself to learn more, and just being cocky and having a huge ego. So there's no room for that in improvement. If you want to get better, if you want to push towards bigger goals, if you want to move the needle forward, you always have to understand that you are not the smartest person in the world, and there are people out there that make more than you, that have been doing it longer than you, that know more than you, and that information is total gold, and you need to be able to seek it out and implement it whenever you possibly can. So this one is huge, not only for your emotion, but also for self-awareness, and it honestly is like a blanket over a bunch of different categories, and that's do not compare yourself to others. So comparison is the thief of joy. If you have a great day trading for yourself, let's just say your goal is to make $10,000 a month, and let's say you hit $5,000 in a day. You're halfway to your goal. That's an absolute amazing day for you and your journey, but you follow some dickhead trader on social media and he makes $65,000 in a single day, you're gonna feel like a bag of shit. So I personally used to follow a bunch of traders on social media when I first was getting started. I used to even go on Instagram stories and see if other traders were in positions, and I would actually hop in the same positions just because they were in it. It was the dumbest thing. It made no fucking sense at all, and it was probably the worst thing that I could have done for myself, not only P&L wise, because I was hopping in trades I didn't understand the thesis to, but also just being able to track my progress. I would have a good day, I would hop on Instagram after the market closed, and I would see other traders that made more than me that day, and then I would get down on myself. I would not really be able to enjoy the progress that I was making. One way that I would recommend to avoid that is unfollow other traders. If you don't know them, if you're not learning from them, if you don't have any type of beneficial relationship from knowing them, whether that's them being a mentor to you or whether they're an actual friend of yours that you know in real life, don't follow them. Never compare your journey to other people's journeys. Never compare your success to other people's success. You don't know what other people have gone through. You don't know how long they've been doing it. You don't know the full story, and to be honest, it doesn't fucking matter. So instead of using comparison as a form of measurement, use it as a form of motivation if you are going to compare. And this is huge because basically it's like the saying, you know, if you hate on somebody else's success, you're basically telling the universe that you don't want to be successful. That's true, but another part of it could just remind you that it's possible, and that's a big thing. So like if you see somebody make 6 figures in a day, that should not make you feel shitty for making a couple $100s in a day or a couple $1,000s in a day. It should motivate you and remind you that it's possible for you to do it too. And whether it's trading wise, whether it's any type of way, whether it's fitness, whether it's income in business, any type of thing, just understand that that is proof that it's possible, not proof that you suck. So just use it that way. Reframe the thought. You know what I mean? Don't use it as a measuring tool. Use it as a motivation tool if you are going to allow that to be an element in your life. So this is really it. It's discipline over everything. So if you're an undisciplined trader, everything I'm saying doesn't even matter. Because if you can't be disciplined to stick to a plan, disciplined to have a pre-market routine, disciplined to follow your trading strategy, good luck. Because this is a game where it's all about doing the same thing over and over and over again. That's what good trading is. Good trading is boring because you just do the same thing over and over again. Now, maybe you have a couple different systems in or setups in your playbook that you'll utilize, but they're the same setups over and over. Whether you have 1 setup, 2 setup, 3 setups, 4 setups, 5 setups, you're trading the same ones over and over and over again, and you need to be disciplined to be able to act on them when they present themselves. You need to be disciplined to use proper risk management when they present themselves, and disciplined to follow your process and your reflection system. So whether that's journaling, uploading your trades to an online trading journal, whatever it may be, you need discipline to be a successful trader and to be a successful human being. Discipline over everything. You need that in all areas of your life, not just in how you execute on the charts, but also in your reflection process, in the process in which you release energy, because you can't just sit here and do this shit every single day and, you know, not go outside or not walk around or not pick up a dumbbell or lift some type of weight. You know, you gotta do something to release energy. And whether you do it 1 time a week, 3 times a week, 5 times a week, it really doesn't matter, as long as you're disciplined to the process and doing it and having some type of system in your life, because systems create success. So you need to be disciplined to all of your systems. All right guys, so we're about to wrap up this video, but if you like this, make sure to like, share, and most importantly, subscribe, and I'll keep pumping stuff like this for you out on the regular basis. So whether you want to be successful in trading or even in business, you need to know your stats. You need to know how you perform. You need to know what setups do best. You need to know what times of day you trade best. You need to know the statistics behind the systems that you're implementing. And the reason this is so important is because it's going to give you confidence. So with trading, you need to be confident when things go bad. So good traders are able to trust their process whether they lose 1 trade, 2 trades, 3 trades in a row, because sometimes that's just the probabilities. That's the way the dice land, and you need to know that overall in the long run, your system is actually profitable. Whether it's trading or whether it's business, you need to know that the product you're selling is actually legitimate and there's just ebbs and flows. A huge breakthrough for me was variabilizing certain things in my trading, putting them together into a system, and then going back and pulling the statistics on them. And by doing that, hundreds and thousands of times, and then ultimately I ended up developing an automated system that does that over 20,000 examples. That gave me all the confidence in the world that I really needed to push to the next level, to throw a much bigger size when trading, to understand that what I'm doing actually does work, rather than coming down and hoping that it works or not feeling 100% confident in what I was doing. It gave me total clarity, because it didn't matter how I felt. It didn't matter about the trades that I took before that worked. It didn't matter about the trades that I took before that didn't work. I had in black and white, in statistical sheets, in straight up spreadsheets. I started doing it on Google Sheets. I don't know how to make a spreadsheet. I learned how to make spreadsheets by doing this shit. I would just go back, I would track things, and then in black and white, it would tell me, 65% of the time, this outcome happens. 85% of the time, this outcome happens. Whenever things do work, this is the multiple in which they provide positive risk. So like a 2.65 bare minimum risk profile or a 3.5 minimum risk profile compared to 1 loss. 2.65 to 1, you could be wrong a lot of the time and still be profitable. But what the numbers were telling me was that a majority of the time I was right, and I was right significantly more than I was wrong in terms of a risk profile. So that was all the information that I needed to be armed with to really deploy so much more confidence, so much more capital, and so much more dedication to the way that I was doing things, because I had in black and white proven statistics that what I was doing was working. So it is super important to stay nimble. Now this is kind of building on don't bring yesterday's outcome into the next day, but this is a little bit different. So staying nimble heavily plays on risk management. It also heavily plays on your bias for the day. So with trading, I would always recommend that when a session starts, if you're a day trader, that you do not bring a bias to the table, because in bear markets, there's 1,000-point rallies. In bull markets, there's big red days. So you need to understand that it doesn't matter what the overall thing that you might be feeling is. You need to be nimble and flow like water in the direction of the market. Obviously, this could change depending what markets you participate in, whether you trade small caps or whether you trade futures or whether you trade large caps. It could always be different, but the same principle applies in that you need to be nimble in one way or another. So for me, I understand that I need to give myself at least 4 trades per day. So going into each day, I am basically dividing my daily risk into 4 trades. So if I'm wrong twice, I'm still able to participate on the 3rd trade. And by doing that, I'm able to be fluid and trade in the direction of the market. So to give you an example and to build on that, if I'm looking to take a long trade for the day, I'll take my long trade, let's say it fails, and I take another one and it fails. And now I clearly know that the bias for the day, the attitude of the market for that day is to the downside. I'm able to reframe, refocus, and shift and deploy the other 2 trades towards the downside and capitalize on that direction. Whereas if I'm just like, nah, f it, I'm going long today, the market's pushing, I'm just gonna wait for an opportunity to catch that and ride that up move, and then for some reason it totally reverses and slides hard that day, and let's say has one of the biggest red days of the month, I'm able to capitalize on that because I know that I'm giving myself 2 opportunities to trade one way and 2 opportunities to trade another way if the first 2 are wrong. So staying nimble is super, super important. Be able to go in either direction and just remain neutral. Bringing a preconceived notion into the market might actually make you blind, so you never want to do that. You never want to miss out on opportunity because you're thinking a certain way or the market is going to go a certain way, because the reality is the market doesn't know you, doesn't care about you, it doesn't have to do shit that you want it to do. You just need to actually be able to follow it and go in the direction that it's going if you want to make it in this game. So I hope you enjoyed this video. I hope it provided some value to you. Don't forget to like, comment, share, subscribe, tell a friend, take some notes, do something, implement something from my brain into your brain. I guarantee it will shorten your learning curve in one way or another.